All right, we are live. Let me get my lighting on here. Hey, people can see my face if it's not totally green. Um, I blame the camera, but it's more or less the way the room is painted, and I'm moving this all to a different location over the weekend so we can get a lot better visual. If you care to even look at my face while we're doing this. All right, so let's see what we can do about getting this market worked out. Of course, tomorrow is quad witching day, and that is pretty significant when it comes to price action because you've got a lot of different asset classes with a whole bunch of options expiring tomorrow, and it makes everybody, whether they're running for cover, hedging, or hedging delta, or they're market makers. I mean, there's the volatility is going to be pretty big tomorrow, but the price action might not be. It might not trend. It might just be a bunch of chop, but it will be aggressive chop. So tomorrow is not necessarily a hands-off day. There's certainly some opportunities that'll appear if you're just day trading. However, there's going to be just a massive amount of options volume tomorrow in everything, like your derivatives assets are inclusive of like the indexes. Index options are pretty volatile in this time. And then you've got equities, you've got futures, and then you've got individual equities futures. So, I mean, this is a pretty big deal to a lot of people, and it makes the market just dance. So tomorrow won't, like I said, won't be a hands-off day, but it will be very choppy. Today we can expect some chop as well. However, we've got a greater chance of trending today than we would tomorrow. And from what I can see on SPY, that's probably the case. Let's get zoomed in on SPY and give it a quick look before the market opens and just get a little head for sentiment today and see what we can do with it if there's anything on the horizon for something good to see. Yesterday, as I was expecting, we did get that doji close. So today we do have room to make a big move. The idea is a little more bearish than bullish today. I can't say for sure if it's going to remain this bearish. But the way things are setting up, it's looking like the old bar spinner bar. And the expected move would be down around 383, 382, kind of just inside that lower Bollinger Band. And that's probably one of the major reasons why I keep Bollinger Bands on my grid anyway, is that we get a little bit more idea of where the range is expected to be. So when the Bollinger Bands are nice and wide, like they narrowed here and opened up here, we had a nice wide acceptance. It's almost as if the Bollinger Bands are widening to accept the move. So when you see that, you know that you get a little bit more room for price to go, so your range expands. And that's the whole point. Like here, you got this narrowing here, then we walked a trend, slight expansion. It's almost as if the Bollinger Bands were anticipating being able to accept the move, and then the trend is found on the moving average. So your 8-period moving average is pretty smooth. You can see that price reacts to it very well, and when it breaks it, sentiment changes. Pretty simple stuff. Now, this week coming in, we have let's see. There's Wednesday, there's Tuesday, there's Monday, there's Friday. On Friday, we had a nice bullish push, closed a bar right across the 8-period. So that was a sentiment change, at least temporarily. And then the 20-period, which is the middle Bollinger Band, is kind of your equilibrium or your return to mean, so to speak. So by the time it met that middle price, we weren't ready to go higher. That bar close didn't give us an indication that it was going to be bearish yesterday, but it did give us the indication that it was possibly going to be bearish because of this little wick right here. Remember what your candles tell you. They tell you open, close, and then the wicks will tell you high and low. So when you had this guy here, the high was exhausted, the open and close was kept low, bearish the next day. Here we have the lows were exhausted, open and close was a nice solid hammer. We pushed up, but we arced right over and closed that day with a little bit of bearish sentiment. So the open was here. Red candles open at the top, closes at the bottom, whereas green candles are open at the bottom, close at the top. So just a little basic fundamental. Now, when you get into this stuff, you look a little bit further out and then you come back in and narrow things down. We've got the old 3-bar here, and that's typically on the weekly chart. Not great news. Usually you can expect some big moves after that. So if we close this week with this bar in that range, next week we could expect some serious volatility, and we might even continue, God forbid, into a big old bearish measured move. I mean, that could be catastrophic down to, like, 320 area. Yikes. We'll have to see how next week goes, but I'm anticipating some movement next week. That's for sure. This week, like I said, it may just kind of creep around until Friday, after Friday maybe. Who knows, but more than likely we're going to be kind of stuck in range for a while. Let's see here. Got a couple things to look at. Let's go into the 2-hour chart while we have a minute. 2-hour chart's kind of setting the stage for a big old bearish measured move. We got all this consolidation, and if we break bearish today, it will be pretty volatile, and we can expect either a half measured move or a full measured move. Full measured move would take us way down, but a half measured move, let's look at the difference. So we got about 394.28-ish to 401.80. Not massive, about a $5 bill roughly. That puts us down around 387, 386, somewhere in that neighborhood if we get the half measured move. Full measured move, yeesh. We'll have to see how it goes with the open here, which is in just a minute or so. Get closer and closer, you kind of get the idea that it's been grindy, nice and sideways, little range, little trap. Good week for establishing the strangles that we've been working with, and I'm enjoying teaching that strategy, and I'm enjoying more that it's helping people earn some money in this. And this will be kind of the roll day if you're into those forward options that we were getting into yesterday. This would be the day to take profit on that position, and if you wanted to continue to run strangles on forward, you'd roll the expiration out to next Friday. I can expect some serious volatility in that, and that'll give us the advantage of being able to be in a 50-cent wide spread, so to speak, on long options on either side of price. So if it makes a move, we're going to get it. All right, let's get back down to the grid and break this into our typical time frames and await the open.
اريد اخليه معك عشان توريه له ولا ايه الكرت اللي اتبعت لي الديفيد ده بتاعي.
صح. هي احنا نشوفوها دلوقتي.
لا عندك فكره؟ اهو.
Ryan, your mic's open if you can hear me. I'll put you on mute for the time being, but I'll get back to it later. All right, I have forward up, and this has been a great teaching tool for those option strangles. By the way, it's just been, I mean, even in this chop, we're making money, which is better than a lot of people can say. All right, well, there's the bell. Let's see where we go today. And I'll get the futures up here in a few minutes when I'm ready to trade them. I'm going to let this shake out a little bit. I do have a slight bearish sentiment on Disney up here. Thinking it's kind of set up for that measured move, but then again, it could just start going into range here between about 115 and 110, somewhere in that neighborhood. If it gets into a bearish sentiment and maintains a bearish trend here over the next few days, it's got a lot of different levels in the price ladder, so to speak, to walk back down here. So definitely keep an eye on Disney. I said I'm a little more bearish than bullish on Disney and, well, the market in general this week, so I like being a bear. Maybe I should change my my avatar to Yogi. It's an opportunistic predator, that one. All right, here goes a nice little green bar on Ford. And if you walked into that spread yesterday with the strangle, this is where, if we're generally bearish, we can take advantage of closing for a small profit, the call side of that, and then working with the put side on the way back down. So I'm going to keep an eye on SPY for a couple more bars and make sure that that's the sentiment. And then in fact on Ford, I will start going into a 1 minute and 3 minute chart just to kind of get an idea of when exactly that's going to flip around. And if it touches 15 bucks, man, that's right where that strike is. We got 15 and 14.50. So the $15 call, 14.50 put. And Stone is with us today, but he's a little quiet. He's not feeling so good. Might have the Rona. And just take it easy, brother. All right, there's that breakover on Ford. Let's see if we can get that. I'll double check too. Boom, call is done. Wahoo. All right, next animal, waiting on that put. And the idea is if it starts to break above 1477 here, I can go ahead and leg into a little bit more of the put side and expect a return to median. However, we're looking to roll today, so this will be where I can go and send that out to next week expiration. So in some cases, if this starts to trend today into a bullish manner, I can go and expect to grab a couple of the calls before it starts to trend in next week expiration on a pullback, and then also go and collect some puts when momentum runs out. All right. I'm going to look at a couple things with SPY here in a few minutes. There's another way to approach SPY with a very minimized risk, and that is through the use of debit spreads. You'll run a dollar wide and get them stupid cheap, and you're taking advantage of price swing while hedging a lot of that time decay. And I'll see if I can find a structure to set up on that. Hark, someone has mentioned me. Aha. Whew. Let's see here. Good deal. All right. I will get back into that later. All right. And also, for you members here, feel free to reach out to me, whether it's in voice or chat. If you have any questions on any of the stuff we're going over, let us know. We love answering questions. It's beneficial to everyone, not just you. All right. If you can see on SPY 5-minute chart here, we've got a little range. get one of two things here when you get to the bottom of one of these channels. Sometimes you'll bounce out and you'll look for these couple of long wicks. This is a Stone. Stone caught this yesterday and I didn't. You get a couple of these long wicks down here on the bottom of a channel, and it's a quick point of reversal typically, and you won't necessarily see them on the 1 minute chart fast enough to go and take advantage of it, but we're looking at a quick bull target inside that range bar to the left there at about 394.35-ish. And I can certainly grab some later puts for Ford next week. I've already started doing. Or later calls, I'm sorry. Let me get this out of the way first. So you can see there's kind of a descending channel here. And what's cool about that is you get the idea that you can go and target that 200 period, but only if this remains bullish. The reason why we look at the 5 minute chart for a slightly longer term sentiment and then compare to the 1 minute chart is we're going to know if that's going to make it or break it. This little bar right through that 8 period kind of suggests no. And look, there's that rejection. But bam, we are bears right down to 392, which was yesterday's low target. I had a strong sentiment that we were going to hit that 390 into yesterday's close, but we didn't. We didn't quite get there. So, in my opinion, a little unfinished business there just by looking at the chart. We can approach that low, probably about 391.50 within this bar pretty readily. But we're going to definitely keep an eye on that. This could easily turn into a gap down here, fellas. And ladies, we have a few ladies in our audience. I don't know about YouTube, but we've got a few female traders in our group that are just phenomenal. They amaze me. I'm going to turn off my audible alerts so my phone doesn't distract so much. Besides, I don't want to get sued by Disney for having a Star Wars reference on my live recording here. It's just Jawa jabber, but you know. Don't harass the mouse. Just trade their equity. I like to joke about it. One of the few investments I have is with a private company that you can invest in called Legion M. And I have a policy. Anything I make trading Disney, I invest in Legion M. That's just my thing. I'm not saying it's a recommendation or anything like that. I'm not, calling out anything, but look into them if you're interested. Definitely a company to check out. I'm not much of an investor myself. I'm more of a trader, but just from what I surmise from that kind of company, it's got a lot of potential. Ah, yes, good point, Stone. SPY is still in that range. Let's go to the 2-hour chart. And let's see, 3 p.m. on the 13th. Ah, the one that completed at 3:30. There it is right there. Oops. This bar right here. Turn the lights off so we can see it. TOS might have a different picture of that, so watch that range. Let's look a little closer in here. We're just starting to turn a little bearish on the 30-minute chart. I started using TTM just to kind of get back into it a little bit. Most of the time I've been using FSTO or fast stochastic, but you know, we can be diversified. Back in the day, I used to be able to use a synthetic version of TTM because it wasn't available on Webull yet, but it never impressed me. So I'm going to see if I can utilize it a little better. What I didn't like about it is it didn't always provide a clear bearish trade entry signal. And I like trading bearish because in my experience, the price action for bearish trades is much faster than the price action for bullish trades. I.e., the phrase we've been kicking around is that the market likes to take the stairs up and the window down. So that's kind of you got to have a dark sense of humor to be into this stuff, but that's kind of been the case historically. It shows. I mean, look, slow grow, window down. All right. So you get into that and you just, you want to look for those bearish trade opportunities because it's a way to make a quick trade and be able to move on to the next thing. Whereas if you're riding, strictly bullish moves, it just take too long and just, it gets annoying. I like to be able to trade and move on. And the other thing is, since I like to teach, I also like to trade that 10-second chart on the MES chart because I can teach those pattern recognition skills really rapidly on that. And the great thing is that repetition builds sort of like trader's muscle memory. You just instinctively know what to do. You can formulate a trade plan and analysis in an instant just glancing at the chart. And that's the kind of thing that makes trading a lot more lucrative. All right, those calls I got on Ford haven't really moved much on the next Friday expiration, but this is starting to trend a little bit until we get to a third leg, I think. There's one, here's two. This is the beginning of the third. So watch for a little bit of a breakover to happen here. And what I'll do is later on, if I see any profit in those next week expiration calls, I'll day trade them for now, and I'll come back to them later when price runs the other side of this trend, or in the other side of this channel, so to speak. So it's a smooth transition. Took a little profit from the overnight hold on Friday's expiration, and I got in dirt cheap. Some others might not have, but I got in at 8 cents a contract. So I mean, selling those at 11 cents, not too shabby. Let me look at the chain and see where they're at now, just out of curiosity. Ooh, they're at 13 cents. Quite all right. Yeah, I'm definitely going to watch for that rotation real quick. Got a little profit on those next Friday expiration calls. All right, keep your eyes on SPY. Look at that 5-minute 20 period right there. This might be the end of that little channel. Let's see, can we get a wolf wave out of that? Holy moly, we might just get one. All right. That's a breakover wolf wave, but it's possible. My tradition, we're going to make that purple. Beware the purple wolf. All right, I'm going to make that into a sigil or something. All right, where is the top of that 2-hour bar? Just a hair under. We got 399.75 possible here. Man, that's a little lofty for what we're looking at here, but we could get a third leg to go there, sure. I'm waiting for that mouse to hit that line right there. And I might just be able to grab a quick little bearish debit spread situation there, which I will throw into our alerts handily. I know I haven't been putting much in there, but this market has not been very kind to swing trading debit spreads. It's just one of those times where you just kind of day trade them, but I wouldn't necessarily swing trade them. Here we go. Let's see if this rejection happens here. See if I can find an options chain for that. Let's see, I'd probably be looking at expiration on the 21st for a Friday, or for a debit spread for SPY. And my gosh, if it hits the top of that 2-hour bar, it might be the time to capture some of that move. However, let's have a look at the daily chart again. Turn the lights off so we can see it. There is the possibility of a morning star setup here where you get a red bar down, a doji, and a green bar up to the top of that bar. Don't forget that that can run up to 402. And we might just see that starting to work out here. Let's have a look at that 10-second chart, shall we? Oh yeah, that's a nice measured move. That would have been a good trade right there. There's your half bar of measured move right there. And that's about 39.62. If it makes a full measured move, let's see what the difference is here. Oh, 39.55. 40, so $15 bill? Come on now, that's very possible. Yeah, that can nail the Globex high. Cool, I will catch the rest of that later when it sets up again. But in the meantime, we can start working out some spreads that we can take advantage of when it does, if it does. Let's see, if you are commenting on our YouTube channel, I'll try my best to get back to them as efficiently as possible, but my primary focus is taking care of our customers in the chat, so to speak, or our members. All right, let's see here. I'm going to see if a couple members have muted their mics, hopefully. There we go. Or, there we go. Excellent. And like I said, guys, if you have any questions, I mean, feel free, pop your microphone open or hit your push to talk and get it out there. I love talking to people. Makes my day a little easier, if nothing else. All right, we might get a 3-leg out of this. This is a nice measured move here. Let's see if we get the 3rd leg. This spinner's a little ominous, so let's see if we get into resistance here. About 394.95 would be the target to break out from this to run a 3rd leg in this move, which would take us to about 395.50. And I'm going to start looking at put debit spreads if that decides to round over and reverse on us. This is cool because it'll give us some nice range. Plus we got a little bit of a channel break. We might retain, yeah, about 395.50. Let's set a pivot there. Here we go. Crack that resistance, 395.50. Look out. We don't always have to be bears. We can be bulls too, at least for a little while. All right, so looking into next week, I'm looking at probably September 21st expiration. And I want to see when that's going to break over. I'll go check on my next Friday forward calls in a minute here. Those are probably doing really good. Got in at 28 cents a contract on those if you're interested. I do a lot of my options trading for this scenario on my Robinhood account, but they don't have a desktop version. So the reason I do that is because I often will, I have level 3 options trading on my Robinhood account and it's commission free. So it's an ideal situation for people who are into spreads or those who are outright selling options to open. Zero commission means you don't have to take a loss on something where you're using time theta time decay to take advantage of the market in being an option seller. I know a lot of people badmouth Robinhood for various little issues that they have, and in fact controlling some of the meme stock movement, but I don't have to care about meme stocks. Although I did taken advantage of the GameStop situation early on before they started restricting that. I was able to sell some credit spreads that just killed it, but no more. And I'm okay with that because that is a mess. That is in my opinion, that's equivalent to a whole pack of lemmings jumping off a cliff together. That's just, I don't follow anybody when it comes to trading, and I don't suggest the same to anybody. Copycat trading is just, I don't know, man. It's like passing Kool-Aid around. Let's just say it that way. That's just my opinion on the whole deal. I don't want to cause any trouble. I just want to make money.
Good morning, boys.
Morning.
All right, so I'm looking at my my options here.
I might have to turn your gain down a little bit.
I'm sorry there.
That's okay. Just a bit louder. I'm soft-spoken, so.
That's okay. So Ford is, my Fords are up 32.
Nice.
My puts are down 40. I'm sorry, no. My calls are up 32. My puts are down 40, which I was a little bit surprised that there's not that.
I ended up rolling my calls on that open, so I closed the Friday expiration and went into next Friday expiration at 28 cents a contract, and those are doing really well right now. I don't know if you caught that part.
No, I actually just got on here.
Gotcha.
I was trading the open here, working on Puxa vida.
And the way things are looking, at some point, it can certainly hit that $15 mark like it's about to. At some
Oh,
point,
it's already hit it. It's already hit it. But
yeah, right. It
no,
was at
I was
1502. But at some,
focusing on my Apex accounts. Here's where I am so far this morning.
gotcha.
Uh,
Nice work. So the whole point of that strangle is when you see momentum run out on that bullish leg, you can expect price to return to median at some point, which is around, let's see, the 15-minute chart, we'll see where the
so the
control
idea
area-
would be to sell that bullish, sell
Right.
the 15, and then
and then
uh,
ride the puts back down to break even
down.
or profit.
Gotcha.
And it's just a matter of finding when the momentum breaks, and we can keep a close eye on SPY to find out when to anticipate that. Also, there may be some news involved with Ford here, so that's possible.
I don't think there is. It's just, I think, general market sentiment. Now,
Yeah.
actually, there was some news that they were saying the bottom's going to fall out, and Ford is the safe hedge.
Oh, okay. It kind of is. It's a slow moving stock. It's a very cost effective stock.
Yeah.
Got a massive float, so it takes a lot of volume to move it. And that's what's great about trading these strangles on it, because you can just keep a really tight spread on a strangle like this and kill it.
Yeah. So now I'm 40 and 40, so I'm break even on the calls and options here.
Sweet.
So the key is to keep an eye on.
Yeah, if this goes over 15 to hit that 1550 area, you're going to get paid. And the idea is you got two options. So if this is going to trend, you can close that put before it starts to really lose money and ride the calls until it runs out of momentum, and then buy the puts back or roll them out to the next week. I wasn't sure this is going to continue to trend, so I went ahead and rolled my calls out to a later date already. Those are up right now. So I can sacrifice those puts, which are at a very minimal loss expiring this Friday, and do the same when this runs out of momentum. So
what are we looking at? What are we looking at for momentum, do you think, here?
So looking at Ford, it could, let's go to the 15-minute chart. It could get to that pivot at about 524, 525.
1524, you mean?
Yeah, sorry. 1524, 1525. And the other idea is that there is the 15-minute 200 period here, which is a significant moving average that it might just stop at. So about, where does that have? About 1540? No, 1507. Interesting. So watch for the 1-minute chart to start to pull back here. It can. And the moment it starts to break price under that 8 period, and the 8 period starts to roll through that 20 period, that's when the sentiment changes. So we'll keep that on.
That'd be the time to sell then.
Right. And the idea is you've got many opportunities to do whatever is necessary to adjust this trade on that strangle with that volatility. So if this is going to continue to trend bullish all day, you can hold on to the entire position and take a profit on it above that $15 mark. It'll start to make you some money on the whole position. Or if it starts to break over, you can take profit on the long leg or the calls, and then ride the puts either back to a retracement or back to your opening, or even beyond your opening, and take profit on the other leg. That's an option too. And then what I did is I went ahead and rolled out the call side. So I'm into next Friday expiration on the calls, and I got in right about 9:35, I think is when I made that trade. And what that does is I take all of this profit and rolls it in against my puts that are losing right now. And the idea is if this decides to break back down, I can open puts with next Friday expiration against all this profit margin, and that becomes a cash cushion between the two legs.
Yeah.
And then as it rolls back down on momentum, as soon as it starts to run out of steam to the downside and starts to curl back up, I can either profit or break even or take a much less loss on the puts that I have that expire this Friday.
Yeah. Okay.
It's just
so
a way
right now
to.
my puts are outpacing my calls. I'm sorry, my calls are outpacing my puts now.
Yep. So you'll start to see net profit.
So
And we blasted through that 395.50 zone on SPY, by the way. So we're in a little bit of a bullish trend, but this is where I'm going to start looking for a possible flip on that sentiment here. Let me mark the center
So it'd be
point.
good to sell the calls now and then ride the puts down.
There's other options. So, like I said, you can roll them too. So you can take and
Sell them and then rebuy them.
well, keep your this Friday puts open by an equal number of puts for next Friday expiration on the break. After you see price start to crunch through this 8 period and start to trend back the other way, or even a pullback, you can take and capture a lot of that profit that your calls are making by looking at next Friday puts. You can get them really cheap. So if price does roll against your calls, they'll roll adverse to each other. So the puts will profit faster than your shorter expiration calls. And then you can also, like I said, you can also take profit on those calls, ride next Friday's puts down until you see it start to bounce, and then get back into the roll those calls out to next Friday. So it just gives you so many different ways you can adjust this trade on the move and make it net profitable the whole time.
Trying to absorb it all here.
It's a lot.
Yeah.
You can keep it simple too. Like I said, though, you can go and, let's say this thing runs to 1550. The whole position will be net profitable, quite a bit net profitable. So that's a possibility. But looking at SPY here, we're starting to roll back down. We just cranked through that angular support. Let's see the 8 period right here on this 1 minute chart. And the idea is if it breaks that, we can expect a 50% retracement of this rising channel here. And I think Ford will follow suit. So keep an eye on that one too. About 394 would be the bear target if you're trading a breakover on that. And that is a long wick on that 5 minute candle there.
All right, so
watching that 20 period too. That's the confirmation. So breaking the channel, breaking the 8 period, and then breaking the 20 period is going to be the sentiment. Yeah, it did wick into that Globex high too. And that's where this 10-second chart is nice and handy.
all right, so the calls are sold.
There we go. Let me start looking for some spreads real quick. So we might be able to do Monday expiration on the debit spread for SPY, but let's see if I can find something a little better. Let's see, if you were actually the September 21st looking at the 375, 376 strikes for a put debit spread, it's only 10 cents wide. So that's 10% of a dollar. Not saying you'll ever get max profit on that situation, but that's a fairly cheap spread.
For the puts?
Right, for a put debit spread. And
See, I'm still not quite there yet on doing how to do.
Wait until that's in your wheelhouse, definitely.
Yeah.
So you can almost get. Let me wait a few more ticks here.
Just need SPY to die now.
Just
Die,
need
good
SPY to
death.
die. See if that'll fill at 8 cents. If not, I'll have to write it to 9 cents. Sweet. Now I'm looking to day trade these, and then I can also adjust this position into a strangle if I'd like. So I'm writing a debit spread, and I'm looking at the 375, 374 puts. I got into those at 8 cents. This is
Oh,
where,
you're doing the spine. Okay.
yep, on SPY. And the idea is it's got plenty of time, a few days. We're in a time where we can expect volatility. And if I make 100% return on that, I mean, that's incredible. But oftentimes I can make quite a bit more than that on these rotations. You can do the same with just a simple strangle on SPY or even just simply day trading the options. But with the spread, it takes a lot of that time decay out of the equation, so you can take advantage of price moves without worrying about it fading on you. And then likewise, you can run a strangle with it too. So like if we were expecting SPY to be at a medium point, and suddenly we start to see accumulation here where we're breaking into a measured move, we can take the call side too.
Yeah. Okay. I'll just hold on to these puts right now. I could lose a little bit on them, but we'll hold and see if we break. SPY is just not breaking.
Not yet. Give it some time.
No. Yeah, I'll hold on. I mean, well, honestly, these could expire. It wouldn't make that much of a difference. I'd make like a $10 difference. So,
right. Ford keeps on trucking.
worst case scenario is I lose $10 on the strangle. And
right.
In this case, this Ford breaks and I pull out additional profit on the put side.
And that's the other thing is like you have the option to roll it out. You can leg roll it out. I mean, there's a lot of ways you can capture that profit and keep it, and then make more on it later. So to make it a little,
well, maybe if we get later on here, we'll talk together on how to actually do this rollover thing.
Sure.
Where I can actually do it manually here myself.
Absolutely.
All right, up 504 on MQ for the morning. So I think we'll see what SQQ looks like here.
All right, now we've got the 8 period crossing below the 20 period on SPY here. We've got the makings of a triple top with that rising channel break.
Yeah, I was looking at that with SQQQ too here. We've got a nice M, an SQQQ forming a triple top.
All right, let's see if price rides underneath that 8 period and starts to roll a trend. We've got a tight Bollinger pinch on the 1 minute chart as well, which is good and good. We just need price to break that support level about 394.85, and it's game on, baby.
Now, the thing that I don't fully get yet is like right now my puts are at 4 cents and then they jump down to 3 cents, but the price stays the same. Profit loss doesn't move.
Right. That's just that implied volatility fade that you get from the opening range.
Mm.
All right, so this is a support zone. I'm going to mark this in white so it stands out for my many baby blue lines.
Baby blues.
Let me double check the Man, I think I overate for breakfast today.
I haven't eaten yet myself.
My
breakfast is a cup of coffee.
Well, we had omelets this morning and.
Ooh. Yeah, the kids haven't collected the eggs yet for the day, so there were no omelets for me yet.
Yeah, love farm fresh eggs. I buy them from a friend of mine. I can't.
We just cracked that double top there. That double top there.
Nice.
It bounced though.
It bounced right off that support level we looked at. So let's see where we go. We can either accumulate into a flag here, and then, like I said, this can set up for a measured move if it doesn't break this support. We just accumulate sideways here, and then eventually it starts to break bullish. And a measured move, the trade would be you want to see it break the first high. So you want to see it get above 395.75 to go long on that and make your measured move setting for targets above.
Mm-hmm. Yeah, we've got about, I think, 40-ish chickens.
Nice.
And we actually just butchered our 3 turkeys last week, so they're in the freezer.
There you go. Turkey's delicious too. We can't have
Turkey's
chickens or
expensive
turkeys
in
here.
Brazil.
Are they?
Turkey's expensive. Oh man, for like a 14-pound turkey, you'll easily pay well over $100+.
Wow. That's insane.
Yeah, it is. It is. Yeah, I'll pay about 500, between 400 and 500 reais for a 12 to 14-pound turkey.
Wow, man.
So that's when I was just like, we're just gonna buy our turkeys and grow them, and
There you go.
we started working on incubating the eggs, but problem is electricity. The grid here is so horrible; it keeps going out, and I think that the eggs are dead.
Right. All right. I'm going to see about getting into that call debit spread on SPY if we start to see some accumulation for a bullish move here.
Yeah, well, I'm showing crossovers on SQQQ. We're getting crossovers on the stochastic slow, MACD, RSI is heading down, but we could still bounce off.
Yeah, we're still inside that 2-hour bar from
that.
the 13th there. That was
Yeah, we're still inside there.
Stone was mentioning, so
We're inside that trend zone right now still.
yeah.
Here's here's the trend zone on NQ, which is mirrored of SQQQ. So we're staying in that channel there.
Looks like for now, I'm going to lock in a condor on SPY right here. Way out of the money, by the way, but we're expecting some volatility. And the idea
What
is
a condor.
So condor
Besides
is
a
just
really big bird.
Yeah, it's a collection of spreads. So and these are way out of the money, but they're dirt stinking cheap. And the idea is I can leg in and out of these all day long. So for the put side, I went and I bought the 375, sold the 374 put, 8 cents in that risk. Okay, that's $1 wide for 8 cents. The idea is if that later on becomes worth 16 cents, I've made 100% return. On the opposite side of this, way out of the money too on the call side, because no one's going to be wanting to get into all this stuff this week because it's quad witching day tomorrow, right? So
yeah,
you can find that the volume's high, but the implied volatility is a little bit skewed to the point where these spreads can be done very cheaply. And if price explosively moves next week, that's why I'm running to expiration on the 21st there for SPY. I can collect much bigger than 100% return on that situation. So on the call side, I ran to the
call side. You're looking at which one here?
So the call side, I went for 414, 415. So I bought the 414, sold the 415 for 4 cents, which is half what I risked on the put side. The idea is if this becomes a measured move, we start down here, 392-ish to 395-ish. Okay, so it's.
One second, let me get over here. Now, okay, you said you did. I'm trying to look here. Calls at 414 for the 21st of September.
Right.
I'm showing there 22 cents.
Yep, they're stupid cheap.
Okay, well, I thought you said like 3 or 4 cents. That's what confused me.
The spread is what I did. So I
okay.
bought the 414, sold the 415, and it's 4 cents. What that does for me is SPY has a horrendous amount of time decay, so it doesn't leave me a big window. It's realistically a 2 cent risk on that because time decay can eat more than half of that by Monday. But it hedges against a lot of that time decay. So if price goes sideways, doesn't do anything, I'm not losing very much at all. But if it makes an explosive move and blows through those, since those are debit spreads, I'll take a loss on the losing side of that, but the winning side will start to exponentially gain, and especially if price moves through that level. Now the range we have for that this whole entire, you know, bar that we have here from, you know, that whole bearish move we made. I mean, the top of that sucker is at 413. So as price approaches those spreads, if you look down the chain closer to price for Friday expiration for comparison, if price is within a couple dollars of that by Monday, then that exponentially raises the difference in the spread to where I can take advantage of a return on that.
Well, I'm just gonna wait a while before I start messing around with SPY. I'll just stick with my Ford.
Yeah, stick with Ford. And
Yeah.
you can use the same process on Ford, but what's cool about Ford is the price is so gradual that you can leg these. So let's say instead of closing your calls on this, let's have a look.
I already closed my calls,
Okay.
so I'm waiting for it to break now. We're up above almost. We hit 90 on the RSI. Stochastic is up near the 40s, already crossed into 50s,
Right.
and the MACD and the stochastic, we're up around almost 95 on the stochastic. So we're hanging up high here.
Mm-hmm.
So I don't see how we can maintain going up more. It'd be very
It's
hard.
not very likely. So
no, it's not. Here, let me
the
give
thing
me 1 second here. Trying to.
the thing you can
Okay,
do
I'm
here,
sorry.
instead of closing that position, so since I rolled my calls out to next Friday, I've got $15 calls on. They're worth 51 cents a piece now. I paid 28 cents a piece for those. So that's more of a nice return, right? Well, if price tops out here and starts to roll back down, instead of closing those, if I wanted to, I could just sell the 1550 call for exactly what I spent on the 15 call and have a zero risk spread. So then I have no risk in that. No matter what, I'm either going to break even or take a profit, even if I ride it till it closes or till it expires.
Yeah.
Pending early assignment, you know, should it happen, I'm fine with that too, because I still collect the premium for the width of the spread. You know, so I'm still going to collect.
What is
$50 for
early
that.
assignment there?
So let's say I own the $15 call and I sell the 1550 call, and price runs to like $16 by next Friday. And even before next Friday, say Thursday, it's at 1550. Someone can assign me on that 1550 call, and that would mean I would have to purchase, or I would have to sell them 100 shares per contract at 1550. Well, I've got $15 calls to weigh against that, so I would simply assign somebody on the $15 calls. I would buy each of those contracts at $15. I would sell to this other guy who exercised the contract that I sold at 1550. Plus, I already have the entire width of the spread in premium. So that premium is then retained, and then also the price difference is retained. So it's a pretty cool deal.
Yeah, it's a lot like chess.
It kind of is.
Yeah.
But anyway, what I was getting at is I can leg those in. So instead of closing them, since I have next week expiration, I can simply turn them into credit spreads. And even though they're built like a debit spread, I can turn them into credit spreads a leg at a time, you see. And then if by some reason price comes back through 1450 today at some point, I can do that with the other leg. So like right now I'm looking at the puts for next week for the $14.50 puts at 18 cents.
Mm-hmm.
Let's say I pick up a bunch of those and suddenly we find ourselves back to like 1460 or so. I can then probably sell the $14 puts against those long 1450 puts, doing the same thing. I can retain my cost on it or even plus some.
Yeah.
So it's kind of neat how you can use just a little complexity in your options trading to lock in profits. And the idea is that you can set yourself up in literally no lose situations. No matter what happens, you're gonna win. That's the whole idea, is being able to build this simple strategy of buying long strangles and swing trading and day trading them into the ability to lock those profits in. Also, it changes your outlay. So suddenly all the money that you have invested in the long position is covered back in your account, and you can use it for other trades. So you can go and build on this to the next week and the next week and the next week, and you can essentially structure that into, you could own a whole year worth of forward options in this way with a can't lose situation. That's the whole point. You can totally build that into just the most amazing returns that you've ever imagined on one equity.
Nice. Well, that's what I want to learn how to do here. You know, I like the idea of no lose situations.
Yes. They are quite handy, I'll tell you. And it's
We're
just
getting that break on Ford here, so hopefully we'll see.
it's looking like it.
Yeah. Well, we got a little bit of a break there, but not much move on the puts.
Let me throw a UVXY on the grid here. Oh, nice breakover, by the way. Look at that measured move, man.
Yeah.
Baby, that is just awesome. Let's turn the lights back on
Yeah.
for that.
Do you see? Here's the. Now I'm basically what I do with SQQ. I'm organizing my Ford chart the
Nice.
same, so that way I can anticipate what Ford's going to do. But yeah, I mean, follows. I'm telling you, man, you line up all those indicators,
Mm-hmm.
you know what it's going to do. Oh man, look at NQ dump.
Right?
Oh my.
Insanity. Ordinarily, I would be day trading futures right now, but I'm working into my options legs. I can
I've
scalp
been day
this.
trading. I've got one account that I'll probably just cancel it. It was one of my last 50K accounts.
Right.
Just because, like I said, that 3,000 is just a huge number to try to hit in 20 some days
Mm-hmm.
for me. That's why I've been rolling over to the 25K accounts, because I can pretty easily hit 1,500 on
Right.
those. So,
And
so I'm working on that 150K to see if I can maybe just today, finish it out, because to roll it over to performance account is the same amount for any of the accounts.
right. So they charge you a fee when you roll it into a live account?
Yeah. It's basically administration and setup fee. I think it's like $100,
Okay.
and then it becomes a full live account for you.
So you qualify with the trial account,
Mm-hmm.
and then when you're ready to go live and start earning on it, you got to put up a fee to roll that into a live account. Okay.
Yes, and then after that, it's you basically just pay the monthly administration costs, but you can take out money. You can withdraw money one time a month for the first 2 months, and after that, I think it's 2 or 4 times a month you can.
So it covers
I
your
forget off
fees.
the top of my head. Yeah.
And then
Well,
some.
you can take out $1,000 the first month, $1,000 the second month, and then after that, there's no limit.
Okay.
Yeah. So if you're running 10 accounts, you take out 1,000 of each. That's 10K.
Right. And I wanted to touch base, if you don't mind,
Sure.
on something that I learned to do as I was taking my own accounts with futures trading into risk zones. The first thing I learned scalping penny stocks was to just ignore P&Ls, ignore the whole thought of money, and just trade the chart. And that takes a lot of the fear of losing money out of the equation. You lose your emotional attachment to it, and then you just trade the chart. You can focus on what you're doing. So, like in a situation, if you feel like you need the money, sometimes that can put stress on your trading to the point where you start making bad decisions or irrational decisions. And I'm kind of impressed that you're able to do that, readily to make profit on those accounts without that being a factor. That's awesome. But when you think about it, if you are thinking along those lines where you're putting that kind of stress on your trading, I wonder what your next level is if you can take that stress out of your trading and just trade the chart. And I think you'll do, just my honest opinion, I think you'll do a whole lot better. It'll be a whole new realm if you just trade the chart. Nice. Good work, Stone. 350% on 515 916 Ford calls. That is beautiful, baby. Yeah. That is the stuff. I started rolling mine. I went ahead and set up that that credit spread, so it's a zero risk on my long calls for next Friday. And then
Hey there now, Jeremy.
say again.
Can you hear me okay?
Yeah, you cut out for a minute there.
Okay, well, I'm working. I put in my earbuds. Hopefully that'll cut down some of the
Oh,
feedback
yeah, actually,
on your
quite
end
a bit. Plus, it's not as overmodulated. I can turn your mic back up on the output side.
there.
Cool.
Okay, there we go.
Right
Yeah, I've got my earbuds connected Bluetooth here to my laptop, so.
I've been thinking about using my my earbuds in place of my headset, but for some reason, when I do it with my computer, I end up getting kind of a hiss in the background. I don't know why.
Mm-hmm.
This headset I got on, this thing is clean. It doesn't have any hiss or background noise, but no matter how close I put that mic to my mouth, I'm so soft spoken, I guess. It doesn't always modulate to an optimum level for being able to broadcast with it. So it's just my voice more than anything. But that last headset I had, yeah, it was really low. Like people were having a real hard time hearing me. So
Here, check out this this beautiful move right here.
yes, it just cracked that 50% level. I think we're going to run that range all the way back down to our purple wolf.
Textbook.
Yes.
Look at that.
Glorious. And UVXY stacking up bars, dude. We're going to get a 3-bar out of this and probably hit the 200 period, I think, at about 1040.
Well, as long as those forward puts start readjusting, we'll be happy today.
Yeah. And that's the whole thing. Look at this. I had these pivots set up pretty much on cue from all the price action on forward that we've been watching. And it just sets up for range trading like almost on autopilot. You kind of know where you're going to expect it to turn around, and it surely did. It didn't even quite wick to that pivot. It just failed it. Back down we go. That's the great thing about trading those strangles on forward like that. I mean, you can take a neutral position and make it profitable on both legs in the range, or if it breaks out on you, you can just adjust it as you go, or you can take profit on a whole position. You've got many different ways you can take profit on it.
Here, one second, Jeremy. I'll be back.
Sure.
I just found out one of the dogs got in and killed like 40% of chickens.
Oh my goodness.
So I'll be back.
All right, man.
All right, bye.
Bye. Yeah, I went and I bought some puts for next Friday on that breakover too, yes. Let me give you my execution price on that. And I went back in with the 1450 puts, and I got them for 18 cents. I got some of them for 18 cents, some of them for 19 cents. So I'm like an 1850 average. So I bought them a few at a time. Yeah, so that'll definitely be able to lock in that leg later on. Pretty cool beans. And that net SPY position, let me go back to that real quick. So those 375, 374 put spread that I bought for 8 cents is now trading at 11 cents. And the calls are still at 4 cents. So that is a net positive. Let me get back into the whole picture here. Net positive of $2 per set on that whole situation with very, very, very little risk. Pretty cool. And again, I can also leg out of those and adjust them. So like I can go, looking at the 415 calls, I can buy them back for less than I sold them for. And then if the price bounces around in this range, I can lock in net profit positions a leg at a time on that too. So since I opened them as a net, as a net spread, I can have more flexibility with adjusting it than I can going in with the long strangle on forward. I don't have to sit and wait for exact price swings to take advantage of that. I can go and just leg these. So like for example, in that spread when I bought the where am I here? When I bought the the 414 call and sold the 415 call, I sold the 415 call for 20 bucks, and now I can take a $4 profit on that if I wanted to leg that out and just buy it back to close that leg. But that does leave me exposed to the total drawdown on the long position. So then if I look at the 414 call, my average cost was 24 cents on that. Currently that's down $5. So that would put me in a situation where I'd be writing that loss. And I did, at the moment I bought that, I spent that cost, same as the amount of credit I took in on selling the leg against it. So that unlocks that roll. So essentially, instead of these two options having time decay and time value in them working against each other to nullify the effect of time decay, I've exposed myself to time decay at that point. So unless this 415 contract goes down to like a penny later on today, I'm not going to do that. I'm not going to leg out of those. But I have the opportunity to if price gets really wild. So plenty of ways to skin this cat, so to speak. Meanwhile, the cost on my long 375 put was 73 cents. I'm currently up $25 in that one. And let me look at the other put. The 374 put, my average credit was 64 cents. I'm down 21 cents, 20 cents in that one, or $20 in that one. So net profit. A decent net profit and basically almost a risk-free position because they work against each other when price is doing the wild range. But when it makes a big move, that's where the profit comes in. So I'm expecting a big move. That's the whole sentiment of this trade idea is you're expecting a big move, but you're not exactly sure of the direction. And you want to make sure you give yourself enough time to adjust this situation should everything run amok and just go sideways. So the way you can do this is you can close the entire position for net profit. You can go and write it out because by Monday this isn't going to lose much value. Tuesday it probably will because that option set expires Wednesday. So I want to be done with this by Monday. But tomorrow, not gonna lose too much because like I said, those two legs are working against each other and they have amounts of time decay in them. There you go. All right, I'm going to break off for a minute and I've got to talk to somebody for just a moment on the phone here. I'm having some stuff taken care of outside of my trading. And I think what I'll do is I'll end the stream on YouTube so it isn't so long and dreary. And then I'll start it again when I get back so we can have 2 streams today. And then I'll stay with you guys on voice channel. I'm just going to take probably a couple minutes here to go and take care of some things. I'll be right back.